All right, I'm going to do an analysis of the Bitcoin price, and this is based on ICT concepts, my understanding of them. Um, if that's not something you're familiar with, then a lot of the terminology I'm going to use is going to be foreign to you. You'll still be able to pick up some things if you kind of pause the video and perhaps look at your own charts. At the same time, I use tradingview.com. There's a free option available, which I think should give you everything I'm doing here, I think. Um, and if you'd want to study ICT concepts yourself, which is from a guy named Michael J. Huddleston, known as Inner Circle Trader ICT, he's got everything free on YouTube. And I would suggest you start with his 2022 playlist. And if you start with that, contact me privately. I'll give you some more nuanced guidance. All right. So we're looking at the monthly chart of Bitcoin. Over here we have 1st of November, or it's always the first, it's a month, of November 2022, where Bitcoin bottomed at 15,522. And since then, we've been in this buy program, moving all the way up till we hit a high of 126,285. And the question is, what's going on now? Are we retracing in order to continue? Are we going to have more of a deeper retracement, which I'll show you can bring us down to the low 70,000s. Don't panic. It's just temporary. Okay. Or something in between. Right. Or have we already completed our retracement and then we're moving higher? So first of all, retracement is necessary. Let's go back to monthly for a minute. So retracement is healthy and necessary, a necessary part of expansion. Right? There's no real world where we're just going to keep going up, 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 up. It doesn't work that way for a variety of reasons. But so what we see here, we pushed up. This is going to measure the range, right? So over here we pushed up. Let's say from this low here to that high, that would be called a range, a dealing range. Price came back down to just about 50% of the range, right? The low on that candle was 49,577, and that was just a little bit above the 50% mark between this low and that high, this dealing range. So before price could continue to expand higher, it needed to come back to what's called discount. Discount is below 50%, or in this case, close to it. Premium is above 50%. Now let's look over here. We had this high and this swing low over here, right? So that's the high and that's the low. We draw a dealing range from swing low to swing high. And over here, we made that high and we retraced below 50% in this case before being able to expand higher. Now, where are we now? So we look at this high and this low, right? That's the low of and high of this dealing range. And we are right about 50%. Notice that. So we've come in to right about 50% of that dealing range. Now, that should be teaching us something, but there's always possibly more to look at. For example, it could be argued that from this low to that high is a dealing range. And from time to time on the much higher time frames, that's how price will behave. So for example, if we were to pull up a 3-month chart, okay, it would be more obvious that at some point we might be due for a retracement into 50% of this leg. All right, let's go to the weekly chart now. To the point that before we go to weekly, still on monthly, this level here is 50% from the low to the high. And will we come all the way back down to 70,876 or even lower? I don't know. It's possible. So we have to keep that open. Is it likely? It's too early to tell. We're too far away right now. Let's look at the weekly. So looking at the weekly candle right away, we can see, and I've marked this off, we have, this is measuring the range from this low to that high, okay? And clearly this is a swing low, so we have this dealing range, and 50% is right here. As I said, we've come right below 50%. What do we notice here? There are two main reasons that price is going to move, that the markets are moving. And by the way, an important premise you have to understand is that price does not move for the reasons everybody assumes, based on news, based on volume of buyers and sellers. There are algorithms that move the market, and they move it to where there's what liquidity, meaning where there are buyers or sellers. And there are sellers below old lows and there are buyers above old highs. And that's why you start to see how price came up here. Whoops. So, right, price wicked up here just to take out buy orders that were resting above these old highs. Then price came above that old high to take out buy orders that were resting above that high, and the same over here. And after doing that several times, price will always revert and go back to take out the sell orders below old sells, and that's what we do there. And notice over here we have these relatively equal lows now, including one we put in yesterday. There are a nice number of sell orders resting below this level over here. It is highly likely, I expect, that sometime in the coming days or weeks, Bitcoin is going to drop below 97,000, whatever level this is, 90, yeah, the June low, 98,240. And only at that point will we be able to get a sense as to whether we are likely to continue lower and rebalance these imbalances. That's the second reason that price moves, is to offer fair value. So where we have gaps where price was offered relatively only on the buy side, but not so much on the sell side. So price will return to offer fair value and to rebalance an imbalance. Same idea. Or to go from one source, one liquidity pool to another liquidity pool. So let's now drop down to daily. Actually, one more thing before I do. What is this orange box here? It's called a bearish breaker block. Uh, it's basically, it incorporates this candle here, because what we have here is we have a high and a low and a higher high and a lower low. And price is very likely, under the circumstances, to retrace back up, because there's something of an imbalance over here, right? Retrace back up either to just short of or just inside, or to wick up through and then close back inside or below this bearish breaker block before continuing lower. Because just like price will retrace to about 50% or more, usually 50 to 79% of a dealing range, this too is a dealing range. And there are, depending on the time frames you're looking at, and price is looking to offer balanced pricing and liquidity, and to and to pair up orders, match orders based on liquidity on every time frame that there is. So now we're looking at the daily chart, and if I show you over here, if we were to pull, notice this swing high and yesterday's swing low, the 50% mark lines up almost perfectly with the bottom of this breaker block. Okay. If this is starting to bend your mind, it's because, well, it is mind bending, especially if you're coming from the perspective that supply and demand is what moves markets. Actually, no, it's algorithmic. That means there are formulas behind it. And when we can start to think along the lines of the formulas and understand them, then you can trade. Now, right below where we were yesterday, as I pointed out earlier, we have the June low, and this low that that's June 23rd. But this is the low of the entire month. And yesterday we came very, very close. Yesterday, last analysis you may have seen from me, we were somewhere up over here, and I said we were going to come and take out the October low, which we definitely did. Now we're in this buy side imbalance, right? That's what this BTC is: buy side imbalance, sell side inefficiency, meaning that price was delivered to the buy side, but not so much sell side. And we also have liquidity below all these lows. That means there are plenty of sell orders below these lows, and the market is going to come back down to pick up those orders very soon. Whether it's going to be today, tomorrow, this week, next week, I don't know, because here's what I'm seeing, right? We have this dealing range from this high to this low, and there's a likelihood that we're going to retrace up to 50% maybe more than 50%, maybe 60%, 62, 79%, which would put us somewhere inside this bearish breaker before coming back down and taking out the liquidity below here, taking out the June low. Only at that point will we really be able to get a sense as to what's next. Are we going to continue going lower to the 50% mark of the entire dealing range, down from when we're at $15,000 up to 125 or 26? Too early to tell. So I'm just sharing. I don't know exactly what's going to do. I'm just showing you based on this analysis what is likely, and let me know what you think.